Hello, everyone, and welcome to episode 7 of the New Traders Playbook. Today's episode is all about bodies and wicks. As you can see, it's going to be the bodies tell the story and the wicks do the damage. So today we're going to be talking all about the difference between the importance of wicks versus bodies and how that can really tell us a story about where price is going or where price is just doing damage. So let's take a look now at something that we looked at once before, which is obviously just a very basic candle, a bullish candle here. So what we know we have, as always, is we have here our body and then of course our wicks. But now we're going to talk about something that's actually really important, and that is understanding that if you want to know how price moves in the market, what is price doing, how is price explaining itself to you, you've got to understand the difference between the bodies and the wicks. All right. So the number one thing that we're going to be talking about today is the fact that our body is the story. Okay. So when we tell a story, it usually has a beginning, open, and an end, close, right? There is the story. Now, what happens inside of the story? A lot of different things. Some of the stuff that is going to happen within that time frame isn't necessarily going to be as important as the story, but really it's just going to be noise or damage. Okay. So we need to understand that when it comes to the difference between bodies and wicks, really the wick is just the hunt. The wick is hunting out something. We've talked about this a couple of times. Remember I said that when we get to the edge of a wick, we need to look to the left, right? Because we need to know what happened to the left. Even up here, we need to know what happened that stopped price in its track. That was that brick wall, so to speak. The wicks are the hunt. They are hunting something. They are hunting locations that is just as far as it wants to go. And then when price pulls back and it closes, that is actually our clue as to what's going to happen in the following sets of candles or what price is trying to tell us. Okay. So remember that the wicks are really where in reality, it's where the pain lives, right? The pain exists inside of these wicks. The story exists inside of the body. Now, one of the other things that I think is really important for us to understand is that the body, which consists, as we know, of the open to the close of the candle, whatever time frame that might be, essentially tells us who won. Who won within the movement of price. At exactly 12 o'clock, this is where price opened. Those were your winners for that moment. And then at exactly 12:01, if this is a 1 minute candle, this is the winners of this candle's price as they fought back and forth, buying, selling, the algorithm deciding where it wants to end. That is essentially what happened within your body. On the other hand, when it comes to our wicks, it's different. It's the extremes. It's the pushes to the edge. It's those liquidity grabs, the stop loss hunts, the closes are what build structure, okay? The wicks, honestly, they're just negotiations. They're just deciding, oh, well, maybe we'll go over to here and maybe we'll come up to here. But at the end of the day, the bodies are really what's going to tell you structurally what happens within this price and ongoing price. Now, let's take a look at something interesting because as you'll notice, we have 3 very different types of candles. And one thing that they do share, though, is that all 3 of these candles have the exact same high and they have the exact same low. What is different about them? Well, the thing that's different about them, of course, their opens are different. But what's really important is the location with which they closed. Okay, that's really, really important. So let's take a look at our first one here on the left. This one has a close that happened near the high. Okay, there's our close right there, as we know. Close near the high. And you also notice what's happening here. We have a really small upper wick. This essentially is telling us that we have a lot of strong buying power that's happened during that 1 minute, 5 minute, 1 day, it doesn't matter. So we're looking at a very bullish candle. On the other side over here, we've got the top of the candle, bottom of the candle. Here's our close down here. We're closing near the low instead this time, right? So close near the low. Completely different vibe. Same concept though. Instead, now that we've got a tiny wick on the bottom, we've got very strong sellers. Because imagine what these wicks mean. The wick on the bottom down here and the wick on the top up here. Right before we get to the close means that price was pushing and pushing and pushing, up, 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 or down, down, down. And right before the winners of this candle, remember the close, essentially the winners, right before that happened, price got just a tiny bit farther, just a little bit beyond that point, pulled back and the candle closed, which means that the candle wanted to be into that direction. That's why we call this very strong bullish action, very strong bearish action. Now, just so we know, every time this is not always true. These candles can sometimes reverse, okay? Sometimes they reverse. So one thing I don't want you to do, which I've definitely done in the past, is I don't want you to think that just because a candle looks like one of these, that price is just automatically going to, oh yeah, very bullish candle, let's just go and buy. It's definitely going to go through. Or very bearish candle, let's just sell into a continuation. It doesn't always work that way, okay? Sometimes these candles will go up, and I've seen it before where the candle just woo and goes right back down, okay? It's not super common, but it's definitely something I want you to be aware and be careful that these are not just perfect candles to say, yeah, time to go long, or yeah, time to go short. But they do usually show us strong bullish and strong bearish vibes, okay? Now, we've talked about this candle before here in the middle. This is our doji, right? And what we usually see of doji is that mid-range closing in the middle, indecisive type vibe, right? So we've got indecision because obviously price opened here, came down, went all the way up, came down, and closed here. So it really isn't deciding on which side it wants to go. You can kind of call it like an imbalanced auction of sorts. It's balanced out both sides. It wanted to go here, it wanted to go there, but instead it just decided to sit in the middle. As we know, dojis can be really good for later on, but remember that where your candle closes is going to often dictate what happens in the next set of candles, right? So we've seen this structure obviously before. And as I said, sometimes wicks will act as stop hunt or liquidity grabs. So if you notice right here, this candle wicks top right there was the last high that we saw before price decided to move its way down, right? So when price left this swing high up here, essentially what we were left with was liquidity. Okay, so when you hear the terminology liquidity, it really just means that price left a level very quickly and it left essentially stop orders there. So if you imagine that people are short, right, and they see this swing high, which in reality we would probably end up having like another candle over here, right? Maybe we have another candle that looks like that, and then maybe we had another candle over here, etc. So price was going up, and then it left this liquidity up here in the form of a major swing high. Why is it stops? Why are there stops there? Because that's usually what humans do, right? You have to get into the idea of how the algorithm works. The algorithm is going to assume, or know really, that human nature says, oh yes, they know that at the top of these swings, this is a quote unquote safe location for you to put your stop loss. So we've got all of these people who are short, boom, 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 short, 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 they're going down. They think that this is a safe location. So sometimes what price will do is it will come up, and you notice that this green candle over here opens, goes for the high, and then pulls back inside. Now, this is the most important part of the location of this candle. It is where the candle closed. Yes, the wick is important. It did damage because I want you to imagine that a lot of people who were short this whole time had their stop losses up here. Well, what did this candle do? It just went up there, bing, and it tapped them, made sure that they got out of their trade. And then it's possible that after that, now price continues to go down, right? That's very possible. This is your very standard liquidity grab happening at your stop, your highs, your lows, locations where people would have stops. If you notice in this picture, most likely, same thing lies right there. Remember, we always look to the left, but we also remember that these locations are stop loss locations. They're usually locations because if you are right about this being low, maybe the low of the day or the low of the hour, then this is a great location for you to put your stop loss. But you might get tagged on a liquidity or stop hunt just like this. In cases where this happens, one thing that I want you to remember that's really, really important is that we don't chase wicks, all right? What that means is we don't want to chase a wick through some type of liquidity. Where's the liquidity? Well, it's right there, okay? So we wouldn't necessarily say, oh, okay, well, it's swept past here. That means it's time for me to go long because we've swept the liquidity and now we're just gonna continue up. Maybe, maybe not. But we don't want to be chasing things that occur before the candle has had an opportunity to tell us, I have made my choice. These are also oftentimes what you might see as a fake out. All right, so a fake out is essentially that price is doing something. In this case, it's taking the liquidity, but then it's pulling back in and it's closing on the inside of that same location, giving you kind of this, I thought I was going to go up there, but I'm not. I faked you out, and I hope that you went long at the top here. So now I can trap you. I can trap you in your long until we get to the location where your stop loss is, okay? Sometimes you'll also hear it called closing back inside of the range. So what that would look like is if you imagined that this location right here was your range, right? Price went up above it and then it closed inside of it, okay? So that is the idea of closing inside of the range. Now, it's important to understand that this same concept can be used with gaps. We've talked about gaps in the past few episodes quite a bit. We'll see some examples here in a little bit, but gaps do the same thing. Gaps are imbalances. So when they're filled, you can see some of the same exact logic. Gap is filled, you get a high or a low, you get a rejection, you close either through it or you fake out and pull back. Now, this is an example, as I said, as a fake out. What would the opposite example look like? It would look a little something like this. And instead of being called a fake out, we're going to call it a breakout. Okay. Why? Because price decided to break out of the range, as we talked about before. Remember, once again, the most important part here, where is the location of the close? The close is above this old swing, right? Here is where all of the liquidity was, and price went and took it, but instead of pulling back and faking us out, it decided to continue, right? Now, as I said before, does this mean that price is 100% going to continue? Absolutely, positively not, because sometimes price will do this, and then it'll come all the way back down to here, and then maybe it'll continue, right? Price likes to do stuff like that. We just have to make sure that we are looking for some kind of confirmation to choose which bias we want to have. This bias, for example, might be a bullish bias, if that is how you trade. This bias up here might be a bearish bias, if that's how you trade, which meaning the fake out might mean you want to try and find a trade to go down. The breakout may mean that you want to try and find a trade to go up, okay? All right, so keep that in mind. But mainly, biggest point, we don't want to chase things before they tell us what they want to do. Allow price to make its decision, okay? Now, a couple of things I think would be really useful for anyone who's watching as a beginner are a couple of beginner rules when it comes to candles, wicks, bodies, closes, okay? So number one is let the candle close. One thing we don't want to do is make really big decisions, as in entering a market trade or, yeah, I think this is where we're going to go, right in the middle of a candle. And what I mean by that is if you're watching a 1 minute or a 5 minute or a 15 minute, it doesn't matter. If that candle is still going up and down, up and down, up and down, and it hasn't made a decision, right? It hasn't closed. It hasn't decided that the verdict is in. Because really that's what it is. A close of a candle is a verdict, right? The wicks are just the argument that happens before, right? When the two sides are arguing about what's going to happen. That's what's happening in your wicks. But your candle closes is the verdict. That is the choice, okay? So we don't want to make any big decisions in the middle of a candle. We want to allow it to close to confirm that the wick is real, right? That the rejection is real. Now, there are some other instances where we might use the location where a wick goes as a trade, but that is definitely something when you get a little bit more complex and a little bit more fine-tuned on your entries, which is something we will talk about in the future. Number two, bodies over wicks for bias. Okay, if you know anything about trading, people will say that it's often important to have some kind of bias. Maybe you don't want to get stuck to a bias. You don't want to marry your bias, but it is important to have an idea of where do I think price is going? I'm here. Is it going to go up in the next hour, 2 hours, 5 hours, next day? Or is it going to go down? That allows me to figure out what kind of trades I want to take. If the bodies are moving higher or lower, remember, just the bodies, not necessarily where the wicks are going, but if the bodies are moving higher and lower, higher body closes, higher body opens, okay? We want to stay with the trend even when wicks appear to counter trend, right? Remember we talked about pullbacks a few episodes ago. A pullback is a really good example of a counter trend that happens inside of a candle. And on higher, inside of the time frame, on higher time frames, you're gonna see that some of these are just long wicks, right? Doing the damage, not telling the story, right? Bodies over wicks. And the last one here is our wick zones are fantastic reactions. So if you have seen some of the things that I've talked about, these wick zones, which will occur, as we saw above, highs, lows, going to create these zones that are at the extremes that will allow us later on to see future reactions. Remember, we talked last week about how price likes to bounce off of the wick mids or bounce off of the opens. Huge, very important. Back in episode 5, continue your bias based on the candle closes. High time frame is king, right? High time frames are really going to help you to stay on the right side of price. So now for a couple of minutes, let's take a look at some examples that I think will really help us to see a little bit closer into what is meant by the bodies tell the story and the wicks do the damage, okay? So we're just looking at a 5-minute chart that I've already put some lines on. We're gonna observe with the NASDAQ, right? So I want you to notice some things about what's happening here. As I mentioned before, we've got candle not only sweeps, but also candle gap fills, which will do essentially the same thing as a sweep. Notice here how this candle that we're looking at, the one with the long wick, what exactly did that wick do? All it did was damage, right? All it did was move farther than expected. But if you notice, where's the close of this candle? Right here. Close of this candle's all the way up here, right? But the damage happened down here. There's your damage. The story is telling us something different. Notice where this gap fill is. What do we not see underneath the gap fill? There are no closes underneath the gap fill. Right? Now notice, as price is going up, we are in an uptrend, right? That's important. But we also, while in the uptrend, want to be looking for clues. We want to see clues that tell us this is the way I'm going. These are the signs in price. Once again, price gets into a gap. We have an old high. Remember, old resistance turns into support. That's how it's always gonna work that way. And where does this happen? Where does this close happen? Which, me personally, I really like how the close happens above that candle's low. Right? It happens above this gap area, above this old resistance, right? Price is forecasting to us. Now, does this mean that this is exactly how you get into the trade? No, of course not. There's more in that, as like we talked about in our 50% episode. You can take trades depending on that, but read the market. Let the market speak to you and tell you what it's doing, what direction it wants to go. Another really nice one here. So price actually stalled out here quite a bit, right? Up and down and up and down. You see all of these wicks. This is a lot of wicks in this area. But notice one important point. Here is the gap underneath this high, right? Price goes up, makes a gap. What do we get? We get into the gap. Then we go up and we get a sweep, right? Remember we talked about that on the first picture that we saw. Price goes up, and what does it do? Price rejects. It rejects off that high. There was your swing high, right? 1, 2, 3, 4, 1, 2. There's your swing high. Price goes above it, but it does not close above it. So what does that usually mean? That is a rejection of price. Price is not continuing. And what does it do? It does reject. Now on the other side, here's our gap fill. Notice how none of these candles close below the gap fill. Now, does it always work this way? Of course not, because there's another gap down here. There's some more resistance down here. So there's more places for price to have gone if it wanted to pull back farther. It didn't. So we saw a really nice, what would usually be called respect of the level, right? This is respecting this level because it is not closing on the other side. As we mentioned before, price with the close, it's the verdict, right? It's not saying, oh, you're guilty, get on the other side over here and keep going. It has decided that that's as far as it wants to go, right? So as we keep moving, we're going to notice more of the same thing, right? Price going up, breaking through, price going up. This one's quite interesting. We notice here, almost the exact same level, right? Which means price did not close above this swing high. So what happens after that? It does a major pullback. Notice this. Here's a swing low. Price doesn't close below. Another one. Swing low that price, as we get a nice doji right here, indecisive, but then makes a decision. Right? There's the gap fill. Gap fill, pulls back in, closes on the inside. Are you noticing? Hopefully, some trends here. The idea that you can see where price is explaining to you that it wants to go in the future based on what it's doing right now. That is how we trade successfully. Looking at price, not making huge assumptions on where we think it's going to go, but allowing it to prove itself to us. Look at this gap right here. Right, this is a really nice example. Look at this gap. Even better, the middle level of the gap, remember we talked about our middle levels, is also being respected. Not just the bottom of the gap, but the middle level is also being respected. Something I absolutely love to see, okay? Respect. Even though we've got all these wicks doing damage. I mean, look at this. We went up here, boom. You would think, oh wow, price is definitely going up. What did it do? Like I said before, price swept the high of this candle and just went right down, right before, right? But what does it not do? It does not close below the low. And in this case, it doesn't close below the middle of that gap, right? Price is telling us it has more business to deal with. It is advertising that it wants to continue on its way up. Okay. Here's another very nice example. There's your nice high, right? Breaks above. There's a good one right there. Closes inside. The verdict is in. We want to come down a little bit farther. Then it goes up. Look what's happening here. It's pushing above, but it's faking out. Faking out, pulling back, doing it again. Pushing above, faking out. Price makes a decision. On the other side, here's an example of a breakout. Price breaks out. Right? There's the close. There's our old low. Price is making its clear decision on where it wants to go. Okay. Then it's going to pull back. There's another gap. Pulling into the gap, closing inside of the gap. Touching the gap, closing inside. Touching the gap, closing inside. Price is advertising. It is telling you where it wants to go. We just have to listen. All right. Now, is it always going to do that? Of course not. Here's a good example. All right. So just a single example here. There's the close. Look at that. There's a tiny bit of a close. Now, would we call that a displacement? Would we call that a breakthrough? Breakout? No, of course not. But what does price do afterwards? We get this nice doji here that comes in right afterwards to tell us, hey, I'm going to respect it. Next candle, hey, I'm going to respect it. Pull back. I'm going to respect. I'm going to respect. I'm going to respect. Price is going to continue moving its way down. You can see all kinds of things like this, and I would suggest to you to do so. Find these things. Look on your chart. I love the 5 minute, but you can find this exact same thing. Great example that happened a couple of days ago, right in the morning. Look at this. There's a high right there. Huge move. Huge candle. But what happens? Price closes underneath that high, right? It closes on the inside. This is a very solid fake out right there. Then price decides to come back into it. And look at what happens with these. We get this right here. It does go above this candle. Doesn't break out, fakes out. Right? Another one doesn't break out, fakes out. And then after that, price is on its way. Faking out on the way down or breaking out on the way down, depending on which direction, right? Look at price, allow it to speak to you and to tell you, hey, this is the direction I'm going. Then once we have an idea on where price is going and it is advertising to us that it wants to continue on that way, that it wants to continue moving in that direction, that is when we'll be able to find some really good trades to get in line with market trend and make some money. Thank you so much for watching this episode. I hope you're enjoying it. If you are, please feel free to like and subscribe, and we'll see you in the next episode.